So good day. My name is Mark Witten. I'm the CEO of Portal Asset Management. Just wanted to welcome you all to the webinar. I'll just give you a brief overview of Portal and then walk you through the agenda for today. So Portal Asset Management, we're a dedicated crypto and digital asset fund manager. We manage two hedge funds, the Portal Digital Funder Fund and the Portal Radiance Multi-Strat Fund. We're an advisor to both funds. Our investment managers are based in Singapore and Mauritius, respectively. We've been around since 2019. The flagship fund has had funds under management since 2020. Anecdotally, over the past 5 years, we've seen quite a few funds launch and unfortunately not gather critical mass. So only 7% of current crypto funds are funds under management with more than a 5-year audited track record. So in terms of what we're going to talk about today in this feedback, the presentation, we'll give you a brief operational update and then give you a review of the markets in 2024, as well as what's happened in the past quarter, which has been quite a turbulent quarter, and how we fared. We'll give you our outlook, a brief assessment. We don't want to get too involved on the geopolitical and macro side. It can be a presentation all in and of itself. We'll talk about how the funds were positioned and how they're going to be positioned going forward, and how we've pivoted our styles, particularly the actively managed fund, into a more Bitcoin-focused and Bitcoin-dedicated fund, extracting premium via option premium extraction. And then we'll have some time for Q&A. So on the operational side, we've been pretty busy the last 6 months. We decided to move our investment manager for our actively managed Radiance Multi-Strat Fund from AK Jensen in London to Lima Capital in Mauritius, who have a working relationship with our Singapore-based investment manager, First Degree Global Asset Management. And we've set up the Portal Digital Fund, Share Class B, to be a feeder fund or a feeder into the actively managed fund. This was partly done to rationalize fund costs and partly because we weren't able to execute the strategy in totality the way we needed to on AK Jensen's platform. We then implemented the Bitcoin extraction strategy starting in October last year. We tested it. It's been tested internally for the past 2 years. And then we rotated the fund, shifted the fund 100% into Bitcoin in January, and have been running the strategy since then. We also listed the Portal Digital Fund on the Philips Capital platform in Singapore, which gives us quite a lot of access to family offices and wealth managers. And we're busy getting the Radiance Multi-Strat Fund on board there, which has necessitated shutting down our Australian feeder fund. So let's discuss what's happened in the past sort of year and what's happened in the past quarter. So last year was a tale of two halves. From the end of Q4 2023 to Q1 2024, that's 6 months from October to March last year, you had a very strong sort of bull market across both Bitcoin and the alts. And then unfortunately in April, there was a divergence, partly because of, I think, the ETFs taking absorbing a lot of liquidity into Bitcoin, but also because I think there'd been a lot of meme coins printed and a lot of rug pulls and so on. The altcoin space started lagging, and Bitcoin dominance, as they call it, started growing. As you can see in the highlighted yellow section, it became Bitcoin doing this versus everything else. And the market was very sort of choppy and sideways, but it was in a downward trend until the Trump re-election in November, where the markets then had a very strong rally on the back of that. As a result, if I take a look at how our fund was positioned, we had market neutral funds, we had systematic trading strategies, but we also had thematic and fundamental funds that were focused on Web3, gaming, AI, etc., in the nascent sort of digital asset space. And these funds, unfortunately, were not really able to perform as well as we would have liked. They performed in line with expectations. There were no funds that didn't perform, as we expected. But if you're a fundamental fund and the tokens that you're picking just keep, there's no catalyst to realize value, then it is difficult to generate performance. If we take a look at this last quarter, you've now had this call it a reset. This tariff war has kind of gone quite hot. It's not a soft reset. It's been quite a solid purge, particularly if you are holding the Magnificent Seven. The tech stocks in the US have been hit really, really hard. Within Bitcoin, we saw this market peak in December, and again, it briefly peaked in January, and then it's been, it's down 30% off its peaks from 110, call it, to currently 77. It's been quite an extreme pullback. We haven't seen this in the Bitcoin space, in the crypto space, since, there were times in 22, but probably 2018 is the right time, along with the COVID reset in 2020. So just to touch briefly on the tariffs, China does need a weaker dollar, and the USA does need these tariffs to be implemented so they can rebuild their manufacturing capacity. It's a reordering of the global trade order. And I do believe that it's going to bring parties to the table, as we're already seeing with the EU and others. I do think that inflation is pretty much dead. You've seen oil down 25%. So inflation's dead. The world is facing a brief, sharp recession, I believe, and we're going to see liquidity pick up as per the chart on the right-hand side. We're seeing, liquidity conditions starting to ease in the markets. I do think we're going to see more than 3 rate cuts before the end of the year. I'm starting to think there'll be at least 5. And I think we're going to need, further liquidity to keep the wheels turning. At the same time, I do believe that this shift of wealth from the US to its trading partners is going to start reducing as they bring their deficit back in line. So it couldn't continue indefinitely, and there is some medicine to be taken. Whether you look at it as liquidity driven from a Bitcoin perspective, these long duration assets, as we call them, whether it's going to be liquidity driven that it continues to rally, or the fact that there's a whole lot of new participants, or the fact that now, BlackRock's calling it a safe haven asset, I believe it does fare well for digital assets as we've continued to see fiat currencies being debased. Turning to the fund, the numbers reflect what we spoke about, whereas from October 23 to March 24, the fund had a 70% rally, which was in line with the market. And then the fund drifted sideways and had some choppy months from April to October before recovering strongly in November again. The first quarter of this year has been difficult. We had a rally into the end of the year, but then it hasn't been sustained, and the altcoins have fallen a lot more than Bitcoin. Bitcoin's down 30%, the alts are down, between 50 and 60 in some instances. What's important to the second part of the bottom chart is that we've managed to keep our volatility at below 1/3 that of the market. With the new funds we're adding in, which will be Bitcoin-focused funds, we're going to see the volatility tick up slightly from below 30 to around 35%. So we're going to be targeting more than 1/3 of the vol, 35 to 40% potentially, but also it will give us, I think, what we believe is a slightly higher beta and more exposure to the momentum in the market. This is a snapshot of the portfolio from lowest volatility being cash at the bottom, in green, and then the arbitrage funds and market neutral funds in green and yellow, through the momentum funds and systematic trading funds in the blues, to the higher vol funds, which are the reds and the oranges. And you can see we follow a counter-cyclical investment approach as we attempt to smooth and maintain vol. So when the markets are strong, as they were, we would be raising cash, and pulling money back from the high vol funds when the markets are weak, as they have been. The beginning of this quarter, you see our cash holdings are the highest they've been in probably 2 years. We're now deploying to 2 additional Bitcoin-focused funds, one being a leveraged play on Bitcoin, which is the Radiance Multi-Strat Fund, is a leveraged play on Bitcoin that extracts premium on a short-term basis. The other being an enhanced alpha fund, which is 100% in Bitcoin and then uses some other trading strategies, but is sort of 1 to 1.5 times beta Bitcoin. And you can see that in the newer funds that have been added, be it in the turquoise and the light green. So we've taken money away from the arbitrage funds, which is the yellow, and the low vol high frequency trading funds, which are more market neutral. We still believe that the alts will have their day in the sun. So we've left the funds that are mostly thematic and fundamental. We've reduced their position sizing. We're going to be reducing a little bit further, and we're putting more money into the systematic trading funds, which sit in our medium vol bucket, that generate alpha, generally, smaller amounts, but throughout the cycle. So they're not too concerned around picking the right token. They have trading strategies. This next slide over here is just a summation. Like the green funds and the yellow would be in the low vol bucket. The blue funds and momentum would be in the medium vol bucket, and then the thematic and fundamental would now be in the higher vol bucket. And that'll now include also the Bitcoin funds we mentioned. So you can see, we were pretty high in cash in the middle of 23. We reduced that going into the end of the year, and we reap the benefits and the rewards of that in the first quarter of 24. And then we subsequently been putting more money towards momentum and reducing the higher vol buckets to pull money back towards what we perceived is going to be a market pullback. We've been rewarded for that. I think the numbers will be pretty good when we look in hindsight relative to the market overall. And I think what has changed is we've gone from being focused on Bitcoin and across all the alts to now saying, okay, we've got alt exposure through the thematic and fundamental funds we have. We'd now like to focus on pivoting more towards Bitcoin. And this will be clarified in terms of the global market outlook. So going back, looking at this industry, 5-6 years ago when we started the fund, we started the business, just in terms of the legitimization of the industry, the counterparties, the service providers, custody solutions, they pretty much were very, very standard. They weren't at the level they are today. There were big gaps, and operational risk was seen as a very big problem. The volatility was seen as a very big problem, and it was shunned for the most part, by large institutions, and there was no regulatory support. And we went through that, particularly from 2021, 22, all the way through to the end of last year. But the Trump administration's re-election has ended Operation Choke Point 2.0. So now you have regulatory support. The SEC is no longer trying to debank and make on-ramping very difficult. And more importantly, they've set up and established a Bitcoin Strategic Reserve Fund, which is I think it's a very big deal in that it now legitimizes it from a sovereign point of view. And now you have many states, including Texas and others, that will now be also creating their own Bitcoin reserve. We obviously have the new additional institutional investments and whatnot. But if you look at point number two and number 5 together, I think the fact that Larry Fink, the CEO of BlackRock, has advised his pension and provident funds and his internally their own discretionary funds to take a look at Bitcoin as both a long duration risk asset, but also as a safe haven asset. And we must remember that BlackRock is the largest shareholder in like almost 90% of the S&P 500. So the fact that they've legitimized and blessed this asset class and are now promoting it to their largest clients, I don't think we realize the magnitude of money, of demand that could come through, into the space, particularly through, the ETFs and whatnot. This is just a chart to kind of show the quote that Bitcoin is now seen as a safe haven by BlackRock. And if you look at the 60-day return, whenever there's been some major geopolitical events, you see that the S&P is flat to slightly down, and Bitcoin is giving you many much stronger return on the way up. So I do think that Bitcoin has a place in the portfolio as both a diversifier as well as an uncorrelated asset to an extent, which is proven in this latest correction. Touch wood, it continues to hold up relative to the Magnificent Seven. And then the final part is where are we? Like, what are the drivers of Bitcoin? And I'm a big believer in the macro will always dominate the micro. So global liquidity is probably one of the most important drivers of crypto, which is money supply. And we've seen a contraction in money supply post-COVID. And we've been in a couple of years of what we call, it's not contraction in that it's falling, but it's just expanding at a much slower rate. But going forward now, we're seeing inflation ease with oil down, as I said, 25%. We're seeing global demand pull back on the back of these tariff wars. And therefore, you're going to see inflation down. You should see rates being cut, and you should see a lot more liquidity flowing. So the money supply, M2, will pick up again, and it's not going to peak for a while. And that's going to be a big driver of what we believe will be the long duration assets like Bitcoins. Another thing to bear in mind is that this cycle is very different. Institutions like BlackRock and the banks, etc., weren't there 5 years ago. In fact, they were actively discouraging their investors from looking at it. Now it's, they're encouraging the investors. So while all the press was bad in 2022-23, we saw institutions laying pipe, getting ready for, what we see now, and they're continuing to do so. So we want to be long-term holders of Bitcoin. We don't want to trade it. We're not in the business of trying to come up with a price prediction. But if you believe something is going to be sort of higher than it is today in the future, the price is going to be sort of up and to the right. And you're trying to work out, well, what's going to be the main drivers of this? And like we said, it's corporate treasuries to an extent, institutions and sovereign wealth funds, etc. Looking at some price predictions from the likes of ARK Invest, we can see that, if you look at the compounded average annual growth rate of Bitcoin over the past 5 years, it's 67.8%. It's almost 70%. So if we halve that going forward, if we say, well, there's a slowing return, and you say it drops to below, 30%, maybe 25 to 30%. If you look at a CAGR of 40, you get to 700,000. My base case is around 350 to 500,000 in the next 5 to 6 years. So yes, you want to hold Bitcoin for the longer term because it's going to give you a wonderful return as these new participants, including corporate treasuries and nation state treasuries, etc., enter. But at the same time, how else could you monetize your view instead of just holding Bitcoin, which could go from 75 or 80 today to 150 in the middle of the year and then come back to 100? Your return is essentially almost flat. How else could we monetize this view? So what we've been developing over the past few years is a Bitcoin extraction strategy, which we just have the acronym BEST. So the fund, the Radiance Multi-Strat Fund, pivoted 100% to investing in Bitcoin. And we're implementing this proprietary BEST or Bitcoin extraction strategy, which utilizes volatility in the options and futures market to generate very small amounts of daily income. It generally stays very short dated, so it mitigates the risk of severe moves to the up or downside. And it has returned 6 times the amount of Bitcoin in terms of the actual physical amount of Bitcoin held over the past, let's call it 2 and a bit years. So we target 5 to 7% per month of additional Bitcoin, regardless of the market price. The volatility is not risk to us. The volatility is opportunity to extract premium. The risk is risk of permanent capital loss, which means we always maintain a long puts at a certain level to ensure the portfolio is capped. The losses are capped at a certain point that'll always ensure liquidation risk is managed. The Bitcoin volatility has been decreasing, but the implied vol, the forward-looking vol, is still very much above 50%, especially after this last few weeks. And that's great for us in terms of the option premium extraction strategy that we're running. You can see the tested returns, as well as the volatility of daily returns, which is high, especially in the beginning, because the compounding effect in the beginning, as you can see from the yellow line, is very small, and only over time does it grow. So this is for people or investors who want to hold Bitcoin for the long term and essentially want to almost double the amount of Bitcoin that they're holding every year, and reinvest that compounding. And over 4, 5, 6 years, then that compounding kicks in. And the Sortino ratio tells us that it's in line with other asset classes and that the downside volatility is very much, it's made up for in terms of the compounding, which will then, as it grows the amount that you have. Looking at the actual returns for January, February, March, you can see the Bitcoin extracted was 6.5%, 3.7%, and then 4.9% in March. So the average per month has been 5%. So we've increased our amount of Bitcoin held by 15% for the year to date. Now, the price of Bitcoin determines the NAV of the fund. So the fund will be down 25% in, let's say, February, and potentially down 5% in March. But that's not permanent capital loss. That's just what the price of Bitcoin has done. We've increased our number of Bitcoin from, if we had one, it's now 1.15. So, and going forward, that'll increase by the middle of the year to 1.3. And by the end of the year, you should have 2. So we believe the price is going to do this over the longer term, whether it's 300, 500, or $1 million in 5 years. We don't know, but I believe it'll be much higher. And then we are able to generate almost double the amount, almost double your amount of Bitcoin on an annual basis for the next 3 to 5 years. When you put the two together, it gives you a massive outperformance against the underlying physical Bitcoin or ETF. So that's pretty much the feedback. In conclusion, I'd probably want to leave you with just three thoughts, 3 takeaways. Number one, the bomb's gone off. The markets have been reset. It's been a purge. It has wiped out a lot of leverage. The new sort of global trade order is being established, but what it is doing is ensuring that inflation is pretty much done. The channels are full. Real inflation can only be driven by excessive consumer demand, which isn't there and won't be there for a while, I expect, as real wages have not kept pace with inflation. So we will see easing liquidity. We will see easing liquidity conditions and stimulus. And I do think that'll be good for long duration risk assets like Bitcoin. We've established that Bitcoin is the premier asset that we'd like to hold. We still believe in the alts. We still believe that there's going to be some amazing unicorns there, but it's very difficult to kind of get a feeling for what they're going to be. And the market is in quite a fluid state, a state of flux. We have exposure to that via the Portal Digital Fund. We have funds that are focused on that are fundamentally based funds. We believe they are the best in the world in terms of picking tokens. Great track records, amazing teams. But in our own fund, we've pivoted to holding 100% Bitcoin and continue to generate yield through the cycle, regardless of whether the price is up or down. We do also believe the third thing is that it's both Trump's re-election and also just the shifts we've seen in the geopolitical world order. We believe that the stars for cryptos are aligning. We believe it's become legitimized via the like of BlackRock and others. The strategic Bitcoin, the sovereign reserves. We're seeing a lot of new applications for funds and licenses in new jurisdictions like the Middle East. Singapore stands out as a very strong jurisdiction, as does places like Switzerland, etc. But America is now moving forward once again to reclaim its dominance as the sort of main innovator within the space and the main source of capital for large funds within the space, as the regulatory conditions have eased up there. So we think the outlook for crypto is exceptionally strong, particularly for Bitcoin. And we think the next 4 to 8 years, I believe, are going to be a great period for wealth generation within the space. I think after that, there might be a lot of participants that come in and the price discovery becomes more efficient. So thank you very much for your time. We appreciate it. If there's any questions, feel free to put them in the chat or to email me, and we can give you more detail and insight into either or both fund strategies. Let me stop the sharing so that I can see the questions if there are any. Is there anyone there? Yes. Kurt, we'll be looking to do a Swiss roadshow very soon. So I'm sure we'll be catching up with you guys as well and presenting the new strategy and what it's achieved. We'll also be building our distribution further in South Africa. We're setting up distribution there in terms of getting Section 65 approved. We're in the process of talking to a few people as to how to get the licensing, setting up a feeder fund. I think that there's opportunity as well there. There's only one other proper hedge fund in SA at the moment, and I think there is appetite as well. Well, if there aren't any other questions, thank you very much. Mind you, there's a Q&A that I'm 65% month. What happened? Sorry, Helmut, the 65% month, are you referring to, we never had a drawdown of 65% month. Are you talking about in the crypto space? If you wouldn't mind just typing in an answer. And I'll just touch on for best. So I'm sorry, but Best has never had a 65% drawdown, and maybe I must just take a look at the returns. There's never been a 65% drawdown within Best. There's been you look in the past performance of Best, the worst month was what? Can you show that slide again? So we haven't given you the full 24 months of performance for Best. We've just shown it as a chart. So Best will do to show you the risk management, to explain it quickly. So there's three parts to the strategy. We're not going to get into it, but at one point in the strategy, you will add some perps to the Bitcoin, and you'll ensure then that you write puts 20 to 30% down to make sure that you manage your liquidation risk. So you might be beta 1, give or take, as Bitcoin falls, you'll be beta one until it gets to around 30% down, and then you're capped. Then your return profile goes from that to being flat. So you wouldn't have in 1 month in any event a 65% drawdown. Once your strategy resets, you then potentially adding in, and getting longer the Bitcoin, particularly on the perps, you would then add puts further down. But it wouldn't be, in 1 month that you'd have a negative 65. And I think we can have a call, or I can set up a session to discuss it with you. But the maximum monthly drawdown should not be it shouldn't be 65%. I'll go through it again. That's the main risk for best. It would be that you have very, very sharp overnight moves, which would be more than 3, 4, 5 sigma or standard deviations away from the mean. And in that event, your put protection would kick in, but it wouldn't be one for one. So you'd have very stark moves overnight. But you'd continue to write premium, regardless of the market fall. You'd continue to write premium along the way. And then just I talked about Kurt's, yeah, so the strategy is unique to Radiance. We were looking for more Bitcoin focused strategies from the middle of last year, and we couldn't find anything. There was one other fund which we were already invested with that had implemented a Bitcoin strategy, but it was sort of more paper traded, and we had to wait for a while to see how it was playing out. We have invested with that fund as well. They run an enhanced alpha Bitcoin product. But it is so far from what we can tell. There are other Bitcoin ETFs or funds that are offering yields, but none are offering the sort of yield that we're offering. Most of them are offering, 6, 7, 8, maybe 10% per annum. We're looking to provide a much higher yield. Maybe we should offer 10% per annum and of the difference. Um, I don't know if there's any other questions. I'd be happy to set up any, we can have another presentation or any private calls if you'd like, and we can go through it in a lot more detail. Okay, well, thanks very much for your time. It'd be great to set up a call, particularly with helmets. Ich mag das gerne. And as we say here in Munich, auf Wiedersehen. We'll see you all soon. And yeah, feel free to reach out if you need anything. Take care.